Well, you guys, let's get right to it. I got exposed to this concept actually from Patrick James. I don't think he's on the call right now, but heads up, thank you to him. And he's like, Jackie, you gotta meet this company in what they can provide. And I will just say on the outset, the reason I was intrigued, first of all, is in this market, we have to always be thinking, adapting. And what do I need? How do I need to change my thinking? How do I need to adjust my approach? And you talk about an answer to that, and that's the topic of our conversation today. If you need more listings, and if you need a listing to sell quicker, can I get a hearty amen on that? Then this could be a solution. Also, it could be a really great tool in your tool belt to be able to take to a potential seller or an existing seller. And so it's more seller financing. And so it's the concept of seller financing. And these guys have come up with an incredible solution that could be an answer. And so I'm going to go ahead and turn it over to Ethan. Thank you so much, Ethan, for jumping on this call today. And I'm going to be watching the chats. If you guys have questions as well, please put them in there. We'll definitely have some time at the end to answer questions, but please put them in the chat box. Any of your thoughts as well, and we can open it up at the end. So Ethan, I'm going to turn it over to you, my friend. Ready, set, go.
Well, thank you so much, Jackie. And thank you, Tom and Patrick and everybody for having us here today. It is a real pleasure and honor to be able to speak with all of my Colorado agents. I'm in Austin, Texas, but I was born in Boulder. I'm back in Colorado all the time. And so it's great to be able to be here with my mountain people. All these flatlanders down here, they just don't get it. So thank you, everybody, for coming together. As Jackie mentioned, my name is Ethan Cope. I'm the lead seller financing specialist here with the MORE program. And I know seller financing sends off bells and whistles for everybody's ears, but we will go ahead and dive into that, rest assured. Today for this call, I'm going to ask for three things. I was going to go to three things. First, be open-minded, right? This is a program that is designed to give you as agents, just like Jackie mentioned, the tools necessary to win more business and close more sales at a higher price. You know, and everybody knows that last year, almost 80% of all agents did one or fewer sales. Something like 2% nationally closed one deal a month. What is it you guys are going to do this year to have a different outcome? What is it you're open to doing and getting creative in order to have the desired result of actually moving a listing? Another statistic I heard last week, 30% of all listings going onto the MLS today will leave the MLS without getting an offer, without ever going under contract. Those that do go under contract, 1 in 5 end up falling out after the option period. Why? What's going on? Is it interest rate? Is it buyer payment? Is it restrictions or guidelines? What's stopping people from being able to, is it confidence in the market? What is it that's stopping people, right? So what we're going to do is three things. 1, open mind today. 2, ask questions, put them in the chat. 3, think about the clients in your pipeline, in your network, either the listings that are on the market that have been sitting and are stale and could use a boost, or the buyers. When we start talking about buyers, guys, the buyers who would totally wrap their hands and head around a program like this as a way to be able to help you to add value for your clients and do more deals. So
Ethan, I have to just say something really quick.
Yeah.
And I meant to say this to begin with, which is on point to what you just said. New construction is killing us in our market. And the reason is that interest rate. You know, that 4.99 interest rate that in our market that builders are able to offer. And so that is so on point to what I think most people are facing.
Oh, yeah, you're right. You know, how do you compete with the builder on a resale market How do you compete with all the other homes? I'm going to go ahead and start sharing my screen here with everybody so that we can see. Yep, great. And share. And so we're going to start, guys, and I appreciate everybody being here with me. So I want to make sure I've got this set up correctly. Sorry, I'm a Google Meet user, not a Zoom user. So if I get a little confused, I hope you'll bear along with me. So as I mentioned, we've created the More program. It's to help you as agents sell and your clients to be able to sell faster, smarter, and for everybody to get more out of their transactions. So I'm going to come back to that page. Jackie, I want to look here at this map because you touched on something that's spot on. Like the general metro around you guys right now is seeing a major influx in inventory, even compared to pre-pandemic levels, just like we are here in Austin. Both of our markets saw a huge influx of people early on in the pandemic. They started to build like hell, right? Doors popping up all over the place. And it's really oversaturated the market in a lot of the country. Some parts of the country, they're facing the opposite conundrum right now. There's still not enough inventory for buyer demand. And everywhere, buyers are still reluctant to move forward because of the cost to borrow money. And so a lot of people are going to new construction because the builder can offer an incentive, maybe that most resale agents can't, or historically haven't been able to. And so I can't wait to show you guys how we help you and your clients to be able to compete and stand out. But before we do that, I just want to backtrack a little bit, hear about us here at the More team. We are mortgage lenders by trade. Ryan Leahy, our senior founder, has been originating loans here in Texas for more than 20 years. He and I have been working together for more than 5 years as loan originators. Through the pandemic, we saw everybody fluctuating into our market, and there was business for everybody. We were ballooning up in size in our office. We grew up to 50 plus people on our team. And then the wheels fell off. Interest rates started to go up, and buyer demand started to come down. And in 2023, after our third round of layoffs, when we shrunk from 50 down to about 8 people, we really began to rack our brains. What is it that we could be doing better to help this market? Who has access to interest rates or money at a cheaper rate than banks do in traditional financing? And so what we did is we took a step back and realized in your market, just like ours, about 80% of homes are owned either outright or with a mortgage below 4%. Your sellers have access to cheaper money than the banks. But how do we help use that as a way to encourage buyer activity? So as I mentioned, we looked at the market in general, and it is tough out there for an agent, whether you're in Colorado or Kansas, whether you're in New York or New Mexico. There's inventory challenges, there's monthly payment challenges, there's competing against new construction all over the place. I know we already touched on this. The statistics right now for realtors are not in your favor, right? And so I'm going to challenge everybody. What are you ready to do? How are you prepared to attack things differently in order to get a different outcome for your clients? So first off, let's talk about listings. I know, Jackie, you mentioned you've got a lot of new construction that you're competing against. So for agents on this call with resale homes, are your listings taking too long to sell this year? Do your clients have an expectation that things are going to go faster than they are right now? What's happening? How can we help overcome that? Are you struggling to convince buyers to move forward at a 7% mortgage rate because they keep thinking it's going to get cheaper if they wait? Because they are just payment sensitive, even though they're setting their parameters based off of price. They're shopping and buying based off of monthly payment. What if your clients, who maybe they've bought in Littleton, but they need to relocate, maybe they got to get back closer to the office and the commute is killing them, or the home is, they bought way more square footage than what they really need, and the amenities and the maintenance and upkeep are just it's not the right property for them. But the idea of selling a home and going from a 3.5% interest rate to a 7+% mortgage rate on a same size house or even smaller home, it still feels, price prohibitive for your clients. What if you had a marketing tool that helped make your listing stand out and motivated well-qualified buyers to make an offer on your listing, even compared to the new construction down the street or across town, and definitely against the other resale homes in the neighborhood? What if that same marketing program, guys, allowed you and your sellers to get more than full price? Welcome to more. A seller bridge loan program for highly qualified buyers and highly qualified sellers. So what is the More Loan program? First and foremost, everybody, it is a marketing tool, giving you as the agent another tool besides a price drop in order to help keep that listing active, fresh for longer, right? Because, traditionally, I think in the Austin market, we're averaging 84 days on market before going under contract. It's probably pretty close to that up where you guys are as well. So it's wonderful, especially for any agents that have only been at it for 4 or 5 years, to have something positive to be able to add when it's time to have those tough conversations with your clients. For anybody who hasn't gone through a downturn before, may not be accustomed to, how do you have a 100-day conversation with a listing client about price, about what needs to happen, and keeping that client engaged and motivated and believing in you and your ability to sell their home faster. So this tool is designed to help you differentiate from the other agents in the market and to help your clients stand out. As a marketing tool and a tool that goes into your back pocket, this is going to be a great option for you to be able to add to your listing appointments. When you're sitting there across the kitchen table and that seller is talking to 3-4 different agents, this is something that you'll be able to share with them ahead of time and say, look, I am ready to be creative and think outside the box in order to help you achieve your goal. Because everybody else you're talking to is operating inside of the same square. And they're all going to get you the same results. And I have something that's going to help differentiate. Another great aspect of the More Loan program is this opens up your buyer pool significantly. In a second, I'm going to show you how we use the program to help make it more homes more affordable and desirable for well-qualified buyers. But not only does it work for listings to attract more buyers, but be thinking about your buyers. Any buyers who told you, I will absolutely buy a home from you. We need to move. This house doesn't work, but I don't want an interest rate in the 7s. If I could have an interest rate in the 5s or a payment in the 5s, I'll buy in a heartbeat. Guys, welcome to the More program, right? This is designed to help your sellers and buyers get more out of the transaction. So who's a good candidate for More on the listing side? The first client that comes to mind is going to be sellers who've already bought their next home, or they still have a departure residence to sell. Those clients that are now carrying 2 mortgages, and that one that they have listed with you is racking up hold cost every month. And every time they're talking about price reductions, they are just thinking about the bottom line and how is this going to impact me in the end. Another great opportunity for a seller financing marketing program, it's going to be for any non-warrantable condos. I know there's a lot more of that in the Denver market specifically, but anybody who's working in your area, any condos that are struggling with warrantability today, for an A+ buyer with 30% down, a non-warrantable condo still carries an interest rate north of 9.5%. But those sellers, your clients, they might be willing to be the bank for a 30% down A+ buyer at an interest rate that's more affordable and more favorable, and giving that buyer a path and reason to buy now and motivating them on your listing compared to others. Another great way to be able to use the More program is for those deals that are falling apart. Whether it's an underwriting issue or a couple of last items that the buyer and seller are just not able to overcome with traditional financing. Well, here at the More program, we help to create incredible transparency for your clients, both on the buyer side and seller side, and help save the deal. We had one recently. It was a condo unit, actually. It turned out the buyer was, really wanted to negotiate on price. They went forward with traditional financing, and it was a non-warrantable unit. We were able to save the deal, bring everybody back to the table. The buyer wanted to walk away. We were able to get the seller re-engaged with seller financing. They offered a more favorable term, an interest rate about 3.5% lower than traditional financing on that unit for a 5-year deal. The buyer came back with a full price offer. They raised their price in order to take advantage of more favorable financing. Other great opportunities are sellers that own their home with an interest rate below 4% or have at least 20% equity. And of course, any one of your clients who have their home already paid off. These are going to be the ideal candidates for offering more. And so I know right now there's a ton of information and ton of detail on this page. While everybody's looking at it, this is a listing from up in Littleton that I pulled earlier today. You guys can see this home right now. It's listed at $675,000. What we do is we give you the tools as the listing agent to be able to plug directly into the MLS. Everything we do is NAR and MLS and federally compliant, so that you can market that same home, but potentially with an interest rate as low as 4.99% for a well-qualified buyer who's bringing 20% for a down payment. That's nothing out of the ordinary. For a $675,000 home, what that means is we have the tools in place so that your seller could become the bank for the right buyer offer for a limited period of time. Typically, we're talking about a 3-year term on average. In this situation, you can see they're offering a 3-year term with a 4.99% interest rate. That gives a buyer who's ready to get pre-approved with soft credit pull and full documentation for traditional financing at the current market rate an opportunity to save almost $750 a month on this home compared to traditional financing. Jackie, you mentioned having to compete against new construction. What if on a resale home, you could market at an interest rate of 4.99% or even lower to help attract that buyer for a short period of time? And in doing so, not only are you saving the buyer more than $700 a month, but in this case, the seller, after they sell the home, they take off all responsibility for taxes, insurance, maintenance. Those are all the buyers. They now own the home. The seller becomes the bank. What do banks do? Banks make passive income. Interest arbitrage is the correct term for it, off of lending on an asset they don't own. In this case, the sellers, they currently have a mortgage, a very low balance mortgage with a high interest rate, 6.25%. They could offer a 4.99% interest rate to a buyer with 20% down and make more than $2,200, almost $2,300 a month after they sell the home in residual mailbox money, passive unearned income. Let me ask you, as agents, when you're thinking about your clients right now and your listings, which of your listings could benefit and would have a strong positive impact if you could market an interest rate as low as 4.99%, and your seller would go, oh, I get to make $2,200 a month after I've sold the house over a 3-year period. That's an extra $82,000 above and beyond the sale price.
And that,
yes,
and just to clarify, that's above and beyond their mortgage, right? The mortgage being paid plus that. Okay.
That's right. Yeah. So in this situation, every month the seller's receiving the principal and interest payment after paying off their underlying mortgage. Right. So we're looking at a $540,000 mortgage on a 30-year amortization with a 4.99% interest rate. The seller has a $600 a month mortgage payment currently on this home. After the buyer when the buyer makes their payment, we use an online servicing portal. For every buyer, they are required to pay principal, interest, tax, insurance, and HOA. They must escrow so we can help protect the tenacity of the transaction for your clients. Our servicer pays that underlying $600 mortgage that the seller has and then sends the seller their interest income each month. And at the end of that 3-year period, when the buyer goes to refinance to a traditional mortgage, or at any point between now and then when mortgage rates fall, we're going to actively earn or work to earn the buyer's refinance business, or your preferred lender will. When they do, in this situation, the seller gets the remaining equity. Not only do they get the equity that they've left in the home, but they are also going to get additional equity because the buyer is continuing to pay down the underlying mortgage as well. So in most cases, we're creating an additional $10,000 to $40,000 in equity for a seller after they've sold the home.
So Ethan, really quick, Don, you have a question?
Yeah, I do. Love the idea of making homes more affordable. Have you seen, Ethan, circumstances where the buyer and seller do a partnership? So in other words, like you said, maybe the seller's already bought another home and they effectively turn their home into a rental. And so they sell 50% of the home. And their partner, of course, is the owner occupant, right? So you've got a tenant with vested interest in making sure that property is taken care of. But and then you'd have to set a amount of value at the time of sale, and then they would basically be partners going forward. But your solution is obviously increasing affordability by some percentage. This would double that again. That strategy. Have you seen that, or do you see how that could work with this kind of tool?
Yeah, great question, Don. So I'm going to just clarify. It sounds similar, something along the lines of a lease purchase style transaction, right? Where
no, it's actually a purchase. So it would, like in this situation, let's say it's a $750,000 or $675,000 home. They would actually be buying $337,500 in home, right? So it's just it would be like they just bought the property together. One of them is treating it as an investment, and the other one is treating it as their primary residence.
Yeah, great question. We've not come across that yet as a scenario, but one of the great things about this program is it's super dynamic. And what we've done is we've built a turnkey platform so that your seller could be the bank for the right offer, and it's legally compliant in Texas and Colorado, across the country. We use a seller financing attorney that helps with the contracting for buyer and seller. So if there's unique situations like that, we can help to find a way to be able to put the deal together. We have had some here that we've done a little bit higher price point, but that have had a diminishing purchase price after the sale based off of how long of a term. So we can get as creative as necessary to help put the deal together for you and your clients, but we've not yet come across a continued a situation where the seller was selling the home but also still wanted a continued portion of involvement afterwards. But not to say that they couldn't be co-borrowers or co-buyers in that scenario. It does, though, create a bit of a challenge because we close that title on the initial transaction. You as agents, you get paid at close. And with seller financing, just like with a cash purchase, there's no appraisal required, which means we open up title when you go under contract. And then we close typically in 10 to 14 days. And you as agents, you get paid your commission at the closing table at the first sale. So in that situation, Don, it sounds like there may be a second sale or a second close further down the line.
No, I don't think so.
The buyer
it doesn't have to be. It would just be, like, let's say that the buyer was putting 20% down. They would put 20% down on the portion that they're buying. So in this case, if it was $337,000, they'd be putting about $67,000 down, right? And so this example, is ideal to help like a first-time buyer get into the market in Denver, for example. But there's also properties that someone, let's say you could take that same buyer and basically double their buying power, right? You could take, if this buyer would qualify for this, they would also qualify for 50% of a $1.35 million home, right?
If the seller is okay with not actually selling the home. One of the benefits of this program is that once the seller becomes the bank, they're no longer responsible for taxes. They're no longer responsible for the insurance. They no longer have to worry about maintenance or upkeep. They are free and clear from the continued, expenses of the property. They are just becoming the bank. But that's not to say that in a unique one-off situation, this program couldn't be beneficial. But that's not really the focus of our marketing. Our marketing is to help attract more buyers and create additional activity on listings that aren't getting there normally. And at a 20% down, it's still $700 more affordable a month than traditional financing. It gives us the ability, or a buyer rather, sir, to be able to purchase a $675,000 home for the same monthly payment as a $537,000 home. It's $140,000 equivalent discount, right, to that buyer. And so let me just show you here another property or another example, and we'll see if it, here's that luxury property, $2.15 million home. The seller currently has a $200,000 mortgage on a 15-year term underneath, but we're looking at offering 2.15, right? For a buyer who's ready to complete their application. This is for highly qualified buyers. And at this price point, usually we're talking about 25 to 30% down payment. If a buyer's coming with 30% down, the seller could offer a rate of 4.99 or lower. And if it's 4.99, the buyer's saving $1,800 a month, and the seller's making $4,600 a month in passive income. But it's about using this as a way to increase activity. I'll mention 48% of the time, when a buyer sees the more program marketing, they get approved with a preferred lender. 48% of the time, they still end up closing on the sale with traditional financing or cash. It is about having additional options and not obligations to be able to help get the deal done.
So Mandy has a quick question, and I think I understand. I know what she's saying. She's saying in this scenario, like in this Buckthorn Drive, right? The buyer still has to qualify for the 1.095 loan, right? It's just almost, Mandy, as if they are they have the purchasing power of like they're buying at the current interest rate, a
$775,000.
Yeah.
Sorry.
Yeah. So they have to qualify for the full sales price. Yeah. Does that help, Mandy?
Yeah. Thank you, Jackie. And I'm sorry, I don't have the chat opens yet.
You're fine. I'm here to help that. So
I appreciate it so much. So you're right. A buyer must get pre-approved for traditional financing, or if we see a lot of adoption amongst high net worth, but alternatively incomed individuals, small business owners, or those that are using maybe a bank statement program or another, loan program. Buyers who are making $1 million a year, but they're only paying themselves $50,000, $60,000 and have to use alternative financing. Today, those mortgage rates are still north of 8%. But when a buyer applies with us, we're able to sit down with you and your seller once they've completed the application and go over the buyer's qualifications so that you can do proper risk-based price adjusting, same way Wells Fargo, Truist, anybody does, based off of the buyer's stats. And it gives us two things by having the buyer complete their application with us. One, it allows us to make sure that you're protected and your clients are protected from predatory lending by making sure that the buyer is qualified for the full loan at traditional rates today. And the other piece is that it ensures that there's a clear path to an exit for your seller before the end of that bridge or balloon period, because we know that the buyer can qualify for a refinance. Whenever you're talking to your sellers about seller financing, they're immediately going to think, why would I want to be the bank for 30 years for somebody I don't know? I don't even want my own kids in the house for 30 years. Like, I don't want them on my books for that long, right? We use a short period of time. The other question they have is, why would I want to be the bank for somebody who can't qualify for a traditional mortgage, can't get one from the bank? This program is built for those that are A-plus buyers, giving them a reason and an opportunity and an incentive to buy now rather than continuing to wait for when mortgage rates fall down for everybody.
And that buyer's interest, that buyer's mortgage payment is, a simple, their sales price times the interest rate. I mean, that's their payment, right? It's pretty standard from that perspective, right?
It's the same as any other mortgage, right? So we're going to require that amortizes on a 30-year structure, right? So every month they're paying down a portion of principal and a portion of interest. They must escrow their taxes, insurance, and HOA payment along with that so that we can protect everything. But the buyer can get a mortgage statement anytime they want from the servicing company. Your seller doesn't have to worry about, how do I generate those documents? We provide the tax information and everything. So the buyer, and we give everybody full transparency, Jackie, through the process. I want to touch on one thing here for your sellers who haven't yet gone to buy their next home, right? In this situation, this Buckthorn, I believe the property is owned outright. There's not a mortgage on it. So when the buyer's making their payment each month, all of the principal and interest goes to the seller. That's why they're making $41.77 a month in passive income. But what if this seller needs to go and purchase their next home still? Well, first, any seller who hasn't yet bought their next home will ask and require that they complete a mortgage application with us, not so that we can try to take their business, but so that we can make sure that they can accomplish their next goal and still offer this as an option, right? If seller financing would stop your client in their tracks from being able to buy their next home, we will not proceed with marketing it as an option because it's not good for everybody. But if they were to, in this situation, let's assume they're selling 1.095. Here's an example of some of the marketing we would give you to put directly into the MLS. Oh, I'm sorry. One more. Here's what I wanted to show you. All right, so we are assuming on this one, guys, that this is a home that's listed for $540,000. The sellers have a mortgage on it. They have a sub 3% rate. If they were selling the home and need to go purchase their next home, if they were to purchase traditionally, they take all the proceeds from the sale of their home and put that down for a down payment on their next property. They'd have a loan of just over $500,000. At today's current mortgage rate, 6.875, it means their principal and interest payment would be $3,300 a month. And after 3 years of payments, they would still owe $486,000. But if your clients are in a similar situation and they're considering accepting a seller financing offer where, again, it is a fractionalized sale, your clients get a portion upfront. In most cases, we require a 20% minimum down payment. Out of the down payment, we're going to cover agent commissions, closing costs, all of the expenses of the transaction. So from 20% down, the sellers would net $66,000. And let's assume now they're putting all that to the purchase of their next home, a $675,000 property. What does that mean? It means each month their principal and interest payment is higher, $39.98. But if we take that $916 of passive income, the interest arbitrage, that found money, and apply it directly to their new home mortgage, well, now they're actually $250 cheaper than a month. Their new housing expense is $250 lower than if they were to buy the home the traditional way or sell traditionally. And at the end of 3 years, when the buyer gets their remaining equity out of the home and they apply that to their mortgage and do a recast or a refinance, they end up coming out almost $27,000 ahead of if they had just stuck with doing it the traditional way, right? It is about being open to being creative. and thinking about new ways to be able to accomplish the goals for your clients.
Okay, so we got some questions here really quick.
Yeah.
What happens at the 3-year mark if a buyer cannot refinance, or if in 3 years the interest rates are even higher?
Oh, those are wonderful questions. So we really work hard to protect against the first by having the buyer apply with us for traditional financing first. That's not to say that life doesn't happen and situations change. Whenever somebody is looking to purchase a home, and I'm going to go back, at a $540,000 purchase price, the buyer is required to have at least 6 months of mortgage payments in cash on hand after the purchase. If it's a luxury or jumbo loan product, well, then the buyer must have at least 12 months of mortgage payments in cash on hand after the purchase. To help limit the what ifs, Jackie, and those concerns, we do use a couple of pieces of collateral to help protect against that as well. Buyer and seller are required to sign a deed in lieu of foreclosure at the time of purchase. And that document is held onto by the attorney associated with the transaction. And it says that if the buyer goes more than 60 days, or if they go 60 days past due on a mortgage payment, the title is automatically transferred back to the seller. They get to take the home back, and they get to keep all the money they've earned up to that point. And they get to call you and say, hey, I'm going to sell this home a second time. Not so bad, right? But what if we get to the end of that 3-year term, and for one reason or another, maybe the mortgage rates have gone from 7 to 9%, and it hasn't made sense for the buyer to refinance? Well, then your sellers, as the bank, have all the power. They can either choose at that point to call the note. Guys, we agreed to a 3-year term, and 3 years is up. You need to repay. Maybe the buyer needs to sell the home themselves. The other option, if your sellers are open to it, again, in this situation we're looking at, the sellers have been making $900, almost $1,000 a month in passive income for the last 3 years. They may have grown accustomed to it. They may be willing to say, yeah, it's tough out there. For a 1% fee, we would be willing to renew and extend for another 12 months or 24 months. And because we're not on a 7% market anymore, it's a 9% world, we're going to raise the interest rate to 5.99%. The buyer goes, oh, great. Thank you so much. Mm-hmm. And now your seller's making even more money each month.
So we're running out of time. Treva, you had your hand up for a minute. Did your question get answered? I can't hear you if you're talking. Can't see you either.
Sorry, I thought I did a thumbs up.
Okay, I'm sorry. I couldn't see it. I'm sorry.
But I did kind of bring up, so even if they weren't able to pay at that 3-year, yes, you'd have a deed in lieu, but you'd still potentially have to go through the eviction process, provided somebody wouldn't comply if they were angry or who knows what, right?
Yes, ma'am. Yeah, eviction, not foreclosure, right? We're able to avoid all of the headaches and long drawn out trouble that is a foreclosure. But yes, potentially an eviction process. And our attorney is there to help if we need to, call the sheriff's office or something like that. But that's a worst case scenario, Trevor. Like the default rate on seller financing is actually lower than with traditional financing. Most people don't expect that, but especially when we're targeting the highest of qualified buyers and putting them through an extra stringent set of guidelines in order to be able to bring them to you and your seller. And oftentimes, if there is an issue, or if maybe a payment is late somewhere along the way, the seller goes, "Hey, you know what? I love that $1,000 a month. I'd be willing to figure out a deal to make it keep working." Because the goal is always to help create an opportunity for somebody who's well qualified and a reason for them to buy now. It's not for old school seller financing with underqualified buyers at above market interest rates. This is a flip on the whole concept in order to help give you guys the tools to be able to just boost the marketing, right? And so how do you do that? And I want to make sure I'm being respectful of everybody's time. The best way to get information for your listings is to send an email to mylisting@moresellerfinancing.com. Send us one address each, if you would, at the listing price. Think of the listing that is stuck or stalled, where your clients it's time to have that tough conversation, and you would love to be able to present a creative option that's different than a price reduction, and see if that's something that would be beneficial for you and your team. My team and I.
And that's what I would highly recommend that, guys. Write that down. My listing at More Seller Financing. Just get that listing address to them and they'll create this scenario. They'd love to jump on the phone with you to see, what the next step is to, just start that conversation with the seller. And that's key. Thank you for sharing that, Ethan.
Yeah, absolutely, guys. I want to make sure we're being respectful of everybody's time. We're going to try to send a follow-up email and phone call to everybody who's on the call today. But think about a listing or a buyer that comes to mind. Somebody who, if they could, would definitely buy with you if they could access interest rates in the fives. Let's get that buyer pre-approved. We also have a buyer program. We'll work with you and contact the listing agents for any liked or hearted properties for your buyers. See which one of their clients would be open to making more on the sale by offering an incentive and a below market interest rate. And that's what we're talking about here. But beyond that, guys, are there any other questions? I know we're here at the end of time, but what else can we do here, Jackie, to best make use of this last?
I would say, what's a good email for you, Ethan, other than this email here? Is there a contact information that they can reach out to you on? They have a question.
Great question. My listing comes directly to me. My listing at moresellerfinancing.com is the best way to get in touch with me about any of your listings or buyers. Our job, guys, is here to help give you more tools. We've engaged in the Denver market. We've engaged in the Boulder market. You are the first agents in the Littleton area that we're talking to. This is an opportunity for you to get out ahead of the curve. Seller financing is beginning to become buzzwords that buyers and sellers are talking about across the country. You are the only agents in the market that now have an exclusive access to a program that gives you the ability to market it and use it as a tool to help attract highly qualified buyers and incentivize full price offers.
And by the way, guys, they are becoming an approved vendor with EXP as well. So this is not just a fly by night scheme. And it's just all about being adaptive and, learning to think differently and opening up your mind to, seller financing, in the market of yesterday was not really a conversation. And yet, that and assumption loans are beginning to become more of the conversation because of that crazy interest rate. So anyway, you guys, I appreciate your time. Thank you so much for being on here. Thank you so much, Ethan, for showing us an adaptive approach and another tool that we can put in our tool belt. I'm going to take it to my listing today. I've already got the Mojo information. Thank you so much. And I think it could be a viable option to offer to buyers out there and get those homes sold quicker. So anyway, thank you guys for everything. Tom, you have any inspiration?
Hey, you know what? Well, thank you so much, Ethan, Jackie. Now you all got your inspiration. Time to put in the perspiration. Have those conversations. That's what it all boils down to. Thanks, everyone.
Okay.
Have a good day.
Thank you, Patrick, for the heads up on more seller financing. Okay. All right. Talk to you later, guys. Thanks so much.
Bye. Thank you.